Morning. Good morning. Today is Tuesday, October 6th, 2020. I'm going to do something different in this video. We're going to cover dividends and we're going to look at an example using Bank of America. So if you want to see how dividend reinvestment can add up to big earnings, stay tuned and watch this episode. Welcome to my YouTube channel. This trading channel will be used to cover my options trading, stock market, and dividend investments. I will show you what I'm doing and explain the reason for what I'm doing. My end goal is to help more people learn that investing can be done by anyone. I believe ordinary, everyday folk can achieve extraordinary results without taking on the extra risk. Enjoy this episode. Welcome back. I'm glad you're going to watch this episode. So today we're going to talk about dividend reinvestment. I'm going to show you an example of what I do with dividends. And in this example, we're going to look at Bank of America, as you can see here in my ETrade account. And what you also will notice is I write options on my shares, and that's going to be covered at another time. Now, all those who follow my channel know I write options because I can earn extra income, generally more than the dividend itself per year. And so this adds another layer of complexity to my strategy. But dividend strategy is actually a buy and hold strategy that's really boring. And for some people, they ask, well, why do this? Well, if you look here, total gains, you see I'm actually up 96% on Bank of America. I have 208 shares. Now, what I want to do is show you Bank of America actually, the shares have dropped recently. Some of it has to do with the current economic downturn. When interest rates get lowered, banks generally drop. But I'm going to show you what Bank of America looked like. The shares traded as high as, I believe it was $35 back in February. I don't remember exactly, so we're going to check real quick. You see this? 35.72. We're going to check a year to date. You see that it was trading at 34, 35 right here in the beginning of the year. Let's look at a 5-year chart. You see the run up was pretty good over the last 5 years. And if you want to see a longer term view, we're going to see that Bank of America, 2 years, here's the 5-year. Here's Bank of America in blue. You see, and then I'm going to just scroll this out a little bit. You see this definitely outperforming. Now, in the last decade or so, Bank of America definitely outperformed. But I also want to recognize that if you held it for 20 or 30 years, you actually did underperform. So a lot of it depends on when you got in. So we're going to look at that today. So I'm going to switch back here. I'm going to show you something interesting. Let's punch up the details. So here you can see I started buying Bank of America in 2008. And here's the price I paid, $37 a share. And there's a whole list of this. You see this? So what I'm going to do is let's make this easier to view. So oh, let's grab a copy of this. Let's try to copy this data out into a spreadsheet. Did it not copy? Copy. There you go. So let's do a couple things here. What I want to do is see how much value I put in. So I'm going to subtract the current value minus the total gain, and that will tell me how much I put in. You see that? The next thing I want to do is convert this to dollar signs. Put a note on this. So this is a purchase. These look like dividends, which is nearly non-existent. That was a purchase. That's a purchase. And that was a purchase. This looked like a dividend. And these look like dividends. Now, this value looked like it was a purchase. These here. In fact, these actually look like purchases also. It looked like I was investing $5 a week. This looked like a dividend, I believe. So that's a dividend. That's a dividend. That looked like a dividend. Yeah, because they must have increased the dividends after the right at the beginning of the upturn, or not the beginning, a couple years into the upturn. Banks were allowed to increase dividends, and you can see that here. So that's what I'm going to do. So these look like purchases. This looked like a catch purchase, and I want to share something. What today we talk about fractional share ownership, but I was able to do fractional share ownerships way before it got popular, and you're going to see that in this here. So one thing I want to show you is, let's look at how much I purchase. So we're going to add a filter on this. You're going to do purchase. Real simple. And you see $2,000, $2,175. What's interesting is, look at the cost of the shares, which is over here. You can see most of the cost is fairly low. And I bought 100 shares over here at $7.20. I bought 43 shares at $11.62 here. Purchase. You see that for $100. That makes sense. Okay? And so you can see I haven't purchased any shares until recently. The last time was after the dip. The shares dropped to $20 from the high of 35, and I purchased another 40, and there was a reason for that. I needed 200 shares to write another option contract, and I've been doing cover calls on my Bank of America. So now, what I wanted to show you was, if this is 2,500, I think I said 2,500. Hang on one second. Let's do that again. It's 2,175. 2,175. So, if we just did the opposite, you will see how much dividends collected, and it's 432. Okay, so let's go back to the dividends. So let's look at some of the early purchases. These were fractional share purchases, which my broker allowed me to do. I can do $500, and it gave me these many shares. One of the things I want to look at is, let me show you what I did here. On this particular day in 2012, I want to show you something called, how much dividend am I getting on this $700 and $720 that I invested on 2012. How much dividend am I getting on that purchase? So I'm going to switch to Seeking Alpha. Seeking Alpha has a really good dividend history. So we're going to just punch this up, use dividends. We're going to do this yield on cost, and we're going to go back 20 years. And what this means is, if you bought the shares on a particular day, you can see how much yield you're making today on that original purchase. So we're going to go and look at 6/2012. So you see the date, 6/2012. I'm getting anywhere between 8 and 9%, right? If I can find the exact date, I don't think I can, but close enough. You see that? 10% yield, depending on how you do that. But you see the yield, and that makes sense. What that means is, the day I bought it, I was probably making close to 0% yield, because banks were not paying anything, or you see that, a few pennies. And then by the time I did it here, you see how the dividend was still pretty low, but they eventually upped it, and my dividend became more. And today, every quarter, I'm grossing over $30. So what I want to look at is show you that this original purchase, my $720, right, which is this, today it yields me, so each 100 shares, I bought 100 shares on that day. You see this here? Bank of America current dividend is one share pays 72 cents. So at 100 shares, which is right here, obviously that would mean $72 in dividends per year, which is a 10% yield, right? Because if I spent $720, right, this is my cash that I use. This is what I earned today, right? This is my dividend return, or not return, dividend earn, right, currently in 2020. And so you don't need to use math, but you can figure this one out, right? It's a 10% return. So what that means is, okay, funny thing is 10% return. Nothing fancy here. So you can see that. So on top of all that, the dividends get reinvested. It purchases new shares, which in turn, in future payment, buys me more shares again. That's the concept of dividend reinvestment. If you add up the total number of shares that I purchase, it's showing me 188 shares. And if you do the total, or dividend shares, 19 shares, roughly. So 19 shares, which makes sense, right? So I'm excited because 19 shares is what I got using dividends. And if you do 19 shares times, right, 24.62, which is current market price, this tells you how much money I got in dividends, and that makes sense. It's the $467. 24.62 times 19 shares for free equals, that's the value I got in dividend reinvestment, which is really not bad considering I only put in $2,100, right? If you go back to this, 2,100, and so if you do the 2,175 is my total cash outlay. This is my total cash out of pocket, right? Right? So this is how much I put in from my own money. This is the dividends, and you want to see how much that is. You can see 21% of my shares are from dividends only. Because if you add these two up, this is the total value of, total value of my dividend share plus my total cash outlay. And if you can see in my account in Bank of America, my total value today is $5,121. Again, right? 5,121 is the total value. So this is total cash. This is all what I got for free. So this is the free money, right? Dividends. Free money, dividends only, and the reinvestment of dividends. And then the total value today is this. And the reason is, remember, the stock can move up or down. And because in this case, the stock actually is valued more than what it was when I purchased it. So this is a way where you can see value can be generated three different ways. One, if the underlying value moves up over time, you're going to create value. Two, dividends that I get every quarter from Bank of America is used to purchase more shares. So that's a hedge. I don't care if the market goes up, and I don't even care if it goes down. In fact, all dividend investors prefer the market to go down. You're buying more shares at a lower price, and you get more shares in return, which in turn get more dividends over the long term. And that's what you see here. You see, as the price goes down, this is the peak. My dividend in near Christmas, I got $29 in dividends. Or did I get, yeah, $29 in dividends. And you can see I paid $35 a share. And because bank stocks have dropped, this makes sense. March was one of the lows, and it still hasn't really recovered for bank stock. But I'm buying more shares because I'd rather buy it at $20 or $24 rather than $30. And at some point, the share price will go back up. Sometime in 2022 or 2023, Bank of America stock will start to rise again. But I wouldn't care because remember, I am making money on the dividends buying more shares. At the same time, and the last piece of my strategy is using options. I write cover calls to collect more income. And I can go over that in another video of how much I collected over whatever, what I can collect in 1 year in Bank of America just using cover calls. I hope you enjoyed this video. If you like it, don't forget to like and subscribe, and have a profitable day.